How's it going, everybody? It's Stas here. So we had a pretty interesting day in the stock market today. The S&P and the Russell went up 0.1%. The NASDAQ 100 went down 0.1%. And the Dow won the day up 0.6%. So today we're going to break down the market, some charts. I also want to talk about some stocks I'm looking at. So sit back, relax, take a sip of your coffee, go down below, get your 2 stocks from Webull. All you have to do is use my link, deposit $100, and we each get 2 stocks valued all the way up to $1,600. And you guys can check out my Patreon if you want all my real-time moves in the stock market. That is linked right down below. And with that being said, let's get right into the video. And as you guys can see, yet again, the S&P 500 hit a brand new all-time high. And this actually came after hours at $428.79. And I believe today was the last day of the quarter, meaning the next couple of weeks, guess what? We have earnings coming out yet again, which is going to be very fun. And the funny thing is, guys, I feel like when earnings season kicks in, once it's almost over, it's already earnings season again, the beginning of the next season. It's funny how that works, and it's going to be an interesting time in the market, that is for sure. And again, SPY, which tracks the S&P 500, hit a brand new all-time high today. And I'm not going to lie to you guys, this, in my opinion, is getting more overbought by the day. It doesn't mean that we're going to crash or it can't go higher. In fact, it probably could go higher. That's the truth. But all I'm saying is the higher it goes, the more risky it becomes, which is why, me personally, I've been cashing out of positions as of late. And you guys in my Patreon, you know this. I sold out of ChargePoint, sold out of Tesla. Today, I liquidated my Neo swing position, and I'm just piling up that cash because I believe, sure, SPY could go 430, 435. It definitely can, right? But I think we're ultimately going to see a sell-off, whether it's 3, 5, 6, 7%, maybe 10%. Nobody knows, but I believe in the next coming weeks, we are going to see some sort of pullback, and the same goes for QQQ, right? And probably even more for QQQ, considering it's more overbought than SPY. And QQQ, you guys know, tracks the NASDAQ 100, and we hit an all-time high on this, I believe, yesterday. Yesterday after hours, we hit that high at $355.76. And by the looks of it, guys, today, we didn't do much but consolidate, right? We held the same level pretty much all day at $354, $355 per share. That was where we leveled off at starting pre-market, at 5:20 a.m. here on the East Coast and all throughout the day leading into the after-hour session today as well. So by the looks of it, no real direction was picked today from QQQ. In fact, it looks like if I clear this drawing set, we closed above the 50 moving average here at a higher low. So I'm interested to see, and that's on the hourly chart, by the way. I'm interested to see, do we end up rallying off this point tomorrow, maybe the next day? Do we end up taking out the highs from recent? Was that yesterday? I forget. I just said it, guys. Yeah, yesterday after hours. Do we take that high out? Or do we end up dumping under the 50 moving average here on the 20-day chart and we start pushing down towards 350? Maybe we break 350, start going down to 345, 340, which quite honestly, I would much rather see that because, again, I think the markets are a bit overbought here, especially QQQ and a lot of the tech stocks. So those are some quick thoughts, and I'm in a bunch of cash. Cash is a position, guys. A lot of people think, oh, I always have to be buying stocks. I always have to be in the markets or I'm losing. Yes, if you're looking long term, that is true to an extent because time in the market is better than time in the market. But if you're a trader, you want to get in and out on the dips and you do want to kind of time the market in a sense, yeah, having cash around is smart because you can take advantage of the short-term volatility, which again, I believe is coming. So what do you guys think? Shoot me a comment down below. I'd love to know your thoughts. If you all are enjoying the video so far, hit the like button. What are you doing? Hit the like button and make sure to subscribe. I see my analytics. A lot of you guys watching the video, you're not subscribed. The videos in general, you're not subscribed. So subscribe to the channel, turn on that notification bell, and let's talk about some stocks here that I'm personally looking at right now. Number one is Tesla. And again, I locked in my swing position on Tesla recently, right, in the past couple of trading days. And I did that at $697 per share, roughly. And now we're noticing that the past couple of days, we've been consolidating at around 670, 680, 690, this little 20, 25, 30 point window here over the past 1, 2, 3, 4, 5 trading days. So at this point, Tesla is getting ready to pick a direction. We haven't done it quite yet, but if we hold, let's say 670, which we have been, we bounce off the 50 SMA here on the 4-hour chart. Guess what? We could end up picking the upside, or the upwards direction, which we would have to break above $700 at that point and start going up to about 715, which was that high from the beginning of March through the beginning of April, also in the end of April, early May. So I think if we break 700, which is such a key spot on Tesla here, guys, we're going to be going higher. And on the flip side, which I just put an alert at 700 here, on the flip side, if we break under 670, there could be a bigger sell-off, especially if QQQ sells off as well. Guys, realize this. When the markets sell off, and I say this all the time, there's going to be stocks that sell off more than the markets, and there's going to be stocks that sell off not as much as the markets. And let me tell you, Tesla is one of those stocks that sells off more than the market. So if QQQ dropped 3 to 5%, I would not be surprised if Tesla dropped 10%, 7 to 10%, 8%, something like that. So we're going to watch and see, and I'm going to put an alert here at $670. Mark is at or below, so this will alert me if Tesla breaks under 670. And at that point, I'm going to be interested in maybe picking up some shares, getting back into a swing position in the mid to low 600s. And the next stock here, which they just reported earnings today, guys, after market hours, is Micron, ticker symbol MU. They just did EPS of $1.88 versus $1.71 estimated, so they beat EPS, and revenue also beat. Revenue came in at $7.42 billion versus $7.23 billion estimated, so solid quarter based on those brief numbers right there. And when it comes to guidance, which is also important, arguably more important than the EPS numbers and the revenue numbers, although that is arguable. I mean, I don't know. I don't know what's more important, but let's just say guidance is very important, right? And they did, for Q4, they're seeing EPS between $2.20 to about $2.40 versus the $2.18 estimated, so that's pretty good. EPS is above estimates there for Q4, and revenue is coming in at $8 to $8.4 billion versus $7.86 billion estimated, so revenue is well above the Q4 estimate. And by the looks of it, guys, and I'm not sure why, but the market is it's an interesting place, guys. Let's put it this way. The stock's selling off after hours. It's down about $1.70, something like that. And it pretty much gave back all of the gains from today, because if you look at the closing price, Micron closed at about $85. It closed up $2 and 2.5% on the day. So it's quite interesting that we're selling off after that good earnings report, but overall, it's still in breakout territory, meaning, and you can clearly see it here on the 4-hour chart, guys, if I zoom in, Micron is trading above both moving averages, it's breaking out of the wedge, and now we're struggling at $85, which we closed literally at that price today, which was resistance in the end of May into more towards the middle of June. So I think if 85 breaks, which I probably should put an alert there. Let me put it at 85.50 actually. That's a better spot. If that's able to break, watch out for a move to 87.50 first, followed by the next big gap, which could be anywhere from $90 to $93 to $95 per share. So I like Micron here. Disney is another one I'm looking at, which if you guys have been following this, Disney has been straight up downtrending for a lot of this year so far. I mean, ever since March. So almost 4 months of a downtrend here on Disney from 200 down to 175. And you guys can clearly see, I mean, we're squeezing deeper and deeper into this wedge here. We're currently trading under the 180 SMA, which we are seeing a red candlestick forming under that here on the 4-hour chart, which isn't the best sign. But for me, if I see a breakout of the 180 SMA and we start taking out levels such as 176, 178, we break out of the wedge here, that is going to be a sign, in my opinion here, I'm not a financial advisor, guys, always do your own research, but in my opinion, that is going to be a sign that Disney's going higher. We're going to be breaking out of the wedge, and we could be pushing to levels that we haven't been at since April, March. I'm talking 185, 190. And the truth is, I mean, I feel like Disney is waiting on the next quarter's numbers. I mean, this company has gotten hit very hard when it comes to the whole crisis. You guys know what I'm talking about. And sure, Disney Plus did help them. The streaming service did help them kind of keep those numbers afloat, because we obviously know the parks took a big hit, which, I mean, we could go all day about that. But now that the parks are back and running, I think the next couple quarters will surprise us. And Disney Plus, yeah, it slowed down a bit. We saw Netflix slow down as well. So these are going to be two services worth watching. And I think if Disney Plus outperforms, this stock could easily break out of the wedge here next quarter and the next 3 to 6 months even. So we're going to be watching Disney. And again, watch out for Netflix too, although I'm not covering that stock in this video. But if you guys remember, the Netflix streaming service, it did not add nearly as many subscribers as people thought, analysts thought, and that is why, screw it, let's go on Netflix's chart. That is why Netflix tanked last earnings report, and now we're seeing consolidation, inverse head and shoulder breaking out, and I think this still has some upside, probably 550, 560, and we actually called out the inverse head and shoulder on this YouTube channel, which is why you guys got to subscribe. So, yeah, watch out for Netflix, watch out for Disney. And if I were to pick a stock, I mean, I'm picking Disney out of those two, and I own Disney, and I don't own Netflix. So, yeah, I guess I put my money where my mouth is, right, guys? And there's two retail-oriented stocks I'm looking at. Number one is GPS, and this is Gap. I'm sure some of you guys have shopped there. This one up 3.3% today. It closed up above $33.60, and by the looks of it, we actually also closed above both moving averages here. This is a very good sign that we're forming a cup and handle. Hey, yeah, this kind of looks like a cup and handle here. Now I want to see if it breaks out of this 34.30 resistance from a couple days ago. I'm thinking if that breaks, which I'll probably set an alert for, I am going to set an alert for right now. If this level breaks, watch out for a move up towards 35.40. Followed by $36.85, followed by maybe $37. And if you guys recall, Kanye West, he inked the big deal about a year ago. Let me pull up this live news tab. He inked the big deal for the Yeezy line. And if you click on this right here, you have CNBC covering this on Power Lunch. I don't really watch CNBC that much. Sometimes I have it in the background. But at least 64% of Gap customers plan to buy the Yeezy line, says analysts. And I believe I was reading something earlier where the average customer is looking to spend about $178 in a year on this. And I want to make sure I'm not misquoting that. So let me pull up this if I could even find it. Let's see here, guys. Bear with me. Here it is. Yeah, here it is right here. 64% said they plan to buy a piece from the Yeezy line, spending an average of $178 in the first year. Of non-Gap customers, 23% said they planned a Yeezy purchase, showing that West has the power to attract new consumers to the brand. And I'd argue that's even more important than people that already shop, the existing customers willing to spend $178 in a year, because if they can draw new customers and repeat customers, meaning these new customers buy again, this is very important. And the truth is, that's the power, love them or hate them, that is the power of Kanye West and the power of just these celebrities in general. These mega superstars, when they get back behind a company, a brand, whether it's Nike with the shoes, whether it's Yeezy with Gap, whatever, Kim K or whatever crap she's doing, with the crypto scam. I'm sure you guys saw that. These people draw a lot of consumers into the brand, right? And the truth is, the consumers spend, and they spend a lot of money, even if it's a bunch of crap like the Kim K promotion of that crappy crypto. I don't even know what it is. I forget. But you guys know what I'm talking about, right? For the most part. Maybe you don't. If not, look it up. She was promoting some crappy crypto, which I guarantee you she probably had no idea about it. But anyway, that's a whole different topic for a whole different video. And on top of that, quick disclaimer, be careful out there, guys. There's a lot of bots in the comments, a lot of BS out there. People pretending to be me, commenting, saying, oh, send, and now I'm looking on my iPad. I literally just got a scam comment. This is insane, guys. You got to be careful. There's people out there sending, don't buy or send crypto here, send crypto there, pretending to be me. I will never do that to you. If it's me on the comments in YouTube, usually my name has, all the time, my name has a gray little circle around it, or my name's grayed out. That is how you know it's me. If it's some random guy pretending to be me, it won't have that gray behind my name. So keep that in mind. And the next stock here is Ross, ROST, another retail-oriented stock. And this is one that's interesting. It went up 1.5% today. Overall, in the past 4 or 5 months, roughly, more like 6 months, almost 7 months. Ross Stores has been trading within this uptrending channel, right? Very clear. Higher highs, higher lows, all that good stuff. And we just held another higher low at about $116 per share. We broke above the 50 SMA, and now we're about to test and squeeze out potentially above the 180 SMA here on the 4-hour chart. And this kind of looks like an ascending triangle as well. So I'm going to put an alert at $125 per share here on Ross. If it's able to break out of here, guys, watch out for a move towards the top of the channel. I think that's coming. I've been wrong before, but by the looks of it, this pattern is pretty consistent. So we got to watch for a move above 125 towards 130, 135. That is where I ultimately think this thing could be headed, meaning it has about, 5, 7, 8, 10% upside from here, obviously depending on where you get in. And 3M, MMM is another one that I'm looking at right now. This is one that I used to own as a long-term investment for a dividend, and then I realized, what am I doing? I mean, no shade to you guys out there that own 3M. It's a great company, but for my personal investment strategy, I was like, why am I investing in a company that's not growing? Sure, they have a great dividend, strong dividend. It's a reliable dividend, and quite frankly, it's a dividend growth company, right? Meaning they grow the dividend a good amount every single quarter. But for me, being a younger guy in my mid-20s, why am I going to be investing in a company like 3M where I could put money in something else that sure doesn't have a dividend, and maybe they pay a little dividend, but there's a lot more growth on the top and bottom line. So for me, I ended up selling out of 3M, and that's another topic for a whole nother video. I might actually do that. I should jot a note down for that, because look, a lot of people think that receiving dividends is great, but the truth is, I like dividends. I love dividends, quite frankly. But the truth is, when you get dividends, guess what's happening? The corporation gets taxed on that money, and you get taxed as well. So it's double taxation, and you have to ask yourself, is it better for the company to take this dividend money and not give it to me, but to reinvest it so I don't have to pay taxes on it? Does that make any sense? And a lot of the time, these growth companies, they don't pay a dividend for that exact reason, because they can take that money, instead of giving it to you as the shareholder, they reinvest it and they grow the company. And in that case, you don't have to pay the taxes. So your brokerage account, it's not being deprived of money that you're giving to Uncle Sam, if that makes any sense. And I'm not throwing shade at dividends. In fact, I own dividend stocks. But the truth is, more of my portfolio these days is correlated, or not correlated, it's built around companies that are more growth oriented, and they don't pay a dividend. And again, I'm not throwing shade at dividends. I like dividends, but you have to think about that, especially if you're younger. And another point on this, and I'm sorry, this is a little side tangent, but it's important. If you're younger, the idea is to build your wealth, right? Build your wealth, gain that nice core, and then when you're getting older, or not even if you're 50, 60, maybe you're 35, 40, and you've built a nice amount of money, then you could put it into some dividend stocks for passive income and reap the reward there if you want to pay your bills with it, or be financially free or whatever. That is another thing worth mentioning. So, side tangent is over, but it was an important one. And let me know your thoughts on that down below, and I'll probably make a video going over that, because there's a big debate on dividends versus growth. Are dividends good? What's better, dividend or growth? So I'll probably make a video on that. And the last stock for today is Gilead, ticker symbol GILD, and this one up 1.4% today. It's breaking out of the wedge here on the 4-hour chart. We're trading above the moving averages as well, and I'm going to put an alert on Gilead at about $69. If it takes that level out, which if you look on this 4-hour chart, 69 was the resistance from the beginning towards the middle of January, beginning of February as well. If that breaks, I'm talking a breakout is coming. I'm thinking rather a breakout is coming. Maybe to about 70 per share, maybe even higher than that. I believe Gilead is at all-time highs right now. Let me double check that. Oh, no, it's not. Oh, wow, it's not even near it. So all-time highs was $85. So if we break 70, guys, there's even more upside than what I initially thought. So, yeah, watch out for that. Put your alerts. And again, always have your alerts set, because we can't look at hundreds of stocks a day. It's just not possible. And, we're going to miss our moves if we don't have alerts set. So, overall, guys, that's it. I hope you all enjoyed the video. If you did, hit the like button, subscribe, drop a comment, and make sure to join my Patreon if you want to. Of course, no pressure. If you guys want all my buys, sells, call-outs, if you're on the top tier patron, if you're a top member there, you get a morning update video every day going over stocks, breakout stocks, what I'm looking at, my plans. So check that out. It's linked down below, or you guys can go to stocksurfest.com/Patreon. That's stocksurfest.com/Patreon. Make sure to also get your 2 stocks from Webull. Simply use my link, deposit $100, and we each get 2 stocks up to $1,600, and you guys can get $30 from M1 Finance by depositing $100, and all of those are linked right down below. I'll catch you all in the next video, which if you guys want to check out my video from earlier, feel free. I talk about 5 other stocks I didn't mention in this video. I'll link it down below. I'll pop it up here as well. Check it out. Let me know your thoughts. I'll catch you all there. Thanks for tuning in again as always. Keep crushing the markets, guys. Peace out.